Good evening, everyone. Welcome back to the Fail Breakdown channel. It's Thursday, January 22nd, 2026. And today, Mayank and I are going to be discussing a couple of different, one level reclaim at 68.35 and one more traditional fail breakdown at the 68.42 level that happened a little bit above. I think the theme for today is maybe just comparing and contrasting the cleanness of the acceptance that happened around the two different levels, and arguably it was much more clearly defined around the 68.42 compared to being a bit choppier, a bit trappier around the 69.35 level. But in either case, clear acceptance. These are higher levels. Obviously, we had the huge push up yesterday, a little bit of a rest day, but still getting some good sweeps of lows that we can use the fail breakdown strategy to trade around. And on that note, this is the strategy defined by Adam Mancini. Check him out through his website and on X. He's got all his methodology on the website, so you can read it for free there. But his newsletter is worth every penny, and I'll be looking forward to reading that later on to see what he thought around these the 35 and the 42 level. So with that, I'm going to get into the charts. All right, we got a couple of different levels here on the chart. We've got the 69.34, 34.35, which was highlighted in Adam's tweet this morning. We did mention it in the pre-market. And then we also had quite a nice low from the London session at 69.42. So we're just going to talk around these two levels, touch on kind of the acceptance that happened around 35, and then the potential problem of like applying the third type of acceptance or the non-acceptance protocol to that 35 level, just because it ran you up into the 42. So as usual, I got the 4 hour up on the left and the 15 on the right. So we did get quite a nice, the first 15 minutes or so just a bit choppy back and forward, but after that we got quite a nice sell down after it, and we flushed below the 35 level by about 10 points. So nice solid flush. But first of all, why was 35 a significant level that we could trade around? Well, if we zoom out a little bit, it was initially back from the gap down. It was kind of significant at that point. Wait, I've lost it. Where are we? Yeah, from the gap down, that was kind of the high we got to off of Sunday's open at the beginning of the week. Tagged that, and we were able to get a level to level move out of that trade. So that was kind of the most recent like establishment of that level. And then in the overnight, I mean, yesterday we recovered it and then broke back below it, and then in the overnight tested exactly before fading back to 13 and then recovering it into the London Open. So a
I
significant.
believe this is kind of what Adam calls a sort of a back test hybrid with a level reclaim, right?
So just back testing kind of the breakout structure.
Yeah, that's kind of how I viewed it because now 35, kind of like you mentioned there, right? Why 35 is important. And then especially when you kind of then put in a nice sweep of it, it kind of turns into a a level reclaim of a really nice back test level.
Yeah, it's definitely not a traditional fail breakdown. But he does, like, you'll see almost every day one of the levels is the top of a breakout. And he says to either, yeah, maybe you can bid it directly or look for a sweep and a reclaim. I mean, in this case, I don't think the structure is as sort of tightly compact as it often is. We've more just got this big arcing, lift up to it and then fade away. But still a consolidation zone between 13 and 35, and then we lifted off of it. But you see this type of level very commonly in his trade plan. So yeah, let's go through. I'm gonna maybe switch the left chart to a 15-minute, and let's just take a look at a lower time frame on the right so that we can kind of see the acceptance here. Um, so with this one, as is often the case, we kind of got both types. I've got just a 5-minute. No, I'm going to go down a little lower. Let's go 3-minute. But yeah, we flushed below it, 10 points, good solid flush, and then kept on returning to the level and then dipping off of it. And this happened, over the course of 20 minutes ish. And then we recovered it with some momentum. I got in, right around 9:20 ish, sorry, 10:20 Eastern time. There was this sort of sweep of Type 2 acceptance after it. I mean, one thing I suppose I didn't really like about it at the time was the fact that price action during the acceptance phase, the Type 1 acceptance, was very just kind of choppy and side to side. Much prefer it when it's kind of moving more cleanly up and down. But nonetheless, price returned to the level, tried to sell off, couldn't break the low, couldn't break the initial flush low, returned to the level, sold off again, couldn't even break that low, and then we pushed up through with momentum. So that's when I took an entry right around 38. Then had to stomach this little pulse of drawdown here, 8 points of drawdown, but my stop was below the lowest low, so no big deal. Of course, perhaps could have been more patient and waited for this nice wick, but if you hadn't entered and then you see that nice wick there, there was a pretty clear entry after that. The trouble there was, by the time that formed, you're pretty close to the 41. And if you'd applied the non-acceptance protocol to this, I'm just going to draw this little box here. I mean, that certainly puts you up in very close. Obviously, non-acceptance is going to be up above 40. So this is how you decided to trade it then. Were you thinking about, you didn't like non-acceptance on 35, or were you just very much focused on the 42 level?
So I was watching both, and then kind of like you mentioned, we started getting some acceptance of the 35, but I just did put some respect onto the 42. I mean, that is a close to a 25 point nice low that we had from the pre-market,
Mm-hmm.
and we were kind of bumping into it a couple of times and rejecting. So I just thought at that point it was a little safer to let that clear, and we had some pretty clear type 1 acceptance of 42, a couple of rejections. We had the first rejection at 950 from 42. Then we had a
On the way
second one
down.
at 10, yeah, on the way
Yeah.
down. And we had the second one, which was the even nicer one after the deeper sweep at 1020. And then we even kind of put in a quick third one between 1025 and 1030 where we hit 42, up back down to 37, and then went back above 42. So as I kind of said in the morning live stream, like I wasn't too keen or interested in trading these levels up here. I was kind of just okay holding my runner. But then once I kind of saw that much acceptance develop, I felt okay about, adding to my runner position a little bit and just adding above 42 and kind of taking that little bit in my head, what would be kind of a safer higher entry there, and just kind of added to the 25% after that nice acceptance already of 35, and then the really nice acceptance of 42. It was kind of clear that sellers were a bit absent.
Mm-hmm. Yeah, it's fairly straightforward. And cleaner on the 42 level, like you point out. I think pretty little bit choppy and whipsaw down at 35. But that, yeah, I mean, always watch out for those tweets from Adam. I think without that tweet, I don't think I ever would have been interested in this 69.35 level. Kind of on my own
Would you have
intuition.
been interested in the 42 on your own, or you think you would have passed on that too?
If I'd not been in a runner, I do suffer from that lazy runner syndrome. I was actually just doing some back testing and um, yeah, noticed a couple of folks kind of talking about it in the Discord as it was setting up, and I'm like, oh, let me take a look. But I wasn't super excited about it, kind of C grade trade for me, so I only took it
Mhm.
in my
Yeah.
funded account, and I didn't take it particularly large. It was definitely on the smaller side, but still, yeah, decent trade. You
Yeah,
know.
even for me, I mean, it was just a runner ad to get to 25% and then
Hmm.
back down. I mean, I think the key thing to note, which I think we said on the pre-market live stream, was like nothing up here after such a massive rally kind of up would be like super high quality. So, I think there's times, and I think this is where, really, really high quality professional traders such as Adam or others are really good at is they identify, I think, areas of when to put risk on, like a lot of risk on, and when to kind of, take a risk off. And I think the more and more you get better at kind of putting in the higher time frame context and kind of market conditions, you can kind of start getting a better feel of, hey, these are kind of certain days and certain trades to kind of, put in higher risk and kind of take in you capitalize on the opportunity. And there's sometimes where it's better to kind of, you know, leave a little risk off and kind of just, play around in the smaller kind of sizes and just kind of, take your little scalps where you can.
Yeah, absolutely. And you mentioned that I think yesterday, right? The 6822. Did you sized up a bit for that one?
I did, I did. I mean, I
Nice.
I really liked it. I thought it was excellent acceptance.
Yeah, yeah.
Um, but again, so that was that was kind of a conditions where, the RSI was quite in the gutter at that point. We had already basically sold off from the overnight low. We had already basically sold off, almost 30 something points. We were essentially already had kind of sold off quite nicely from the bottom of the bull flag, and we were down over 100 points. We were coming off of a huge red day, and then it was also a prior day low that we'd put in a failed breakdown. And I really liked the type 2 acceptance personally from my read of it. So that was something. And also the other thing that helped was the stop wasn't too wide. I mean, I got in at 24 and the low was at 14. So with all those being in consideration, that was one where I was like, okay, I felt pretty good about, going in a little bit heavier and putting on a little bit of a risk on it, attempting it. Obviously, I would say the one negative of that was the fact that Bears were in, some good control there, and so that was obviously the one aspect of it that I would say would not have a check next to it, but everything else I thought was pretty good. So yeah, I think it just comes down to like, being able to identify when are areas where okay things look good to add a little bit, and sometimes where it's like, I think after you have these big rallies up, and it's just kind of price discovery, and I tend to stay pretty risk off then.
Yeah, absolutely. Knowing when to tread on the gas and when to ease off. And that goes to, so speaks mainly to the context and the technical side, but also just to how you're trading in general. I think we've touched on that in the past. Just be aware of kind of where your mindset and your mental game is at. Are you consistently in your A game this week, or are you in your B game, or if you're in your C game, definitely size down and consider just still getting the reps in, but doing it in a way that's not gonna potentially hurt you. Got to stay in the game. You're not gonna get rich off of one trade. You're not gonna make your annual salary off of one trade. At least I'm not. So yeah, we're in this for the long run.
Yeah, for sure. And the other thing too, I think is important what you said is like just keep staying in the game. You kind of have to just stick with it. Even if you're going through a rough patch, because I've seen a lot of, traders in the past who like are going through rough patches and they're just like, well, I'm gonna take a 2, 3 week break. And I actually disagree with that being a good thing. I actually think that is not doing you any good because all that's doing is taking away 2 to 3 weeks of potentially more screen time and enhancing and improving your skill. So I think, if you are going through a rough patch, I think the worst thing you can do actually is just say, I'm going to take 2 and 3 weeks off of not doing anything and not looking at it. I think what I've done in the past and I think has helped is if I'm going through a rough patch, spend those 2 to 3 weeks either doing more studying, more back testing, more trade replays, or continue trading on your main account, but go extremely small size to where you're gonna have zero emotions. It's not gonna affect your account. Like even if it means trading with one MES contract, right? But just continuing to just be in the game and just continuing to get better and kind of enhancing your skill. I think that'll do you way more wonders than just taking 3 weeks off and not looking at anything.
Yeah, 100%. And then doubling down on your journaling, um, and then all areas of your life. You know, if you're not disciplined outside of trading, why do you think you're going to be disciplined on the charts? So yeah, looking at all those different areas. I mean, for me, that means getting up early, doing a workout, spending some sort of mindful time, doing my logging properly in my Excel spreadsheet. I also journal in Notion, which is where I do more of the wordy stuff and kind of screenshots and chart write-ups. And then I also have a physical like diary that I find helpful as well. I like to kind of write things down manually, and that's kind of a quick reference I can carry around with me when I'm just randomly thinking about stuff and like need to kind of check. Hey, what happened last Sunday? What did I do? What screw up did I make last Sunday? Let me go and quickly check at that, or whatever it is. So, yep. All right. Well, that's another nice easy day. Let's see what Friday brings, but it's been a pretty good week, I think, for most folks. So we'll probably be slowing down a bit more tomorrow and just taking things easy. All right. Anything you want to touch on to close out?
No, that's really it. I think we've covered some good bases.
Mm-hmm. Yep. Sounds good. All right. We'll catch everyone in the Discord. We'll see you next time.